People still think of us as SGAG. Yes, that's still alive and running. That's not going to change. But we actually have a business that works with thousands of creators and partners in the region that enables them to also enjoy the same kind of business model, commercial success.
If we buy something to kill its culture and make it a part of, I guess, the whole, then we would be killing the very thing we paid to buy.
What is up, everyone? Karl and I are back here in SMU when we started our whole SGAG and then Hepmil journey because we have something really crazy that we wanted to share with you guys today. Karl, share it!
Why don't you share?
No, you're the CEO. You share.
Okay, here goes. Hepmil Media Group has been fully acquired by Publicis Groupe.
Acquisitions can be quite a dance to woo one another. But when you won and lost together, that's unmatched in terms of getting to know each other. Karl and I really only started speaking in March of this year, which doesn't seem like a lot of time, but I guess is a testament to how close we were in terms of values and ambition.
We started the year actually with some offers on the table for a Series B investment round. But along the way, we met some opportunities where they came with full acquisition. And really, as a board, we had the opportunity to kind of sit down and discuss what's the best path forward. Publicis has been a long-time customer, 10 years to be specific. They were actually our first client. So when it was time to really sit down for a formal deep dive into the potential of a merger, we really had the right vibes or the right feel about meeting the other party because we knew them. We knew them not just from a friendship level, but at a deep working relationship where we had done 10 years worth of work. We had innovated together. We had wins together, also gone through losses together.
Yeah.
Southeast Asia is such a complex region. We work differently from one market to the other within Southeast Asia. And so we cannot subscribe to a one-size-fits-all approach to influencer marketing. And that's exactly what the group saw from day one. They wanted us to preserve how we work, why we do things a certain way, and they respected that so much. And that was actually the biggest reason for us to cross the line.
We spoke to the Hepmil team quite candidly about some of our own journeys with acquisitions. We've had loads of successful global acquisitions. Here in Southeast Asia, we acquired a company in Thailand called Brilliant and Million. And the CEO of Brilliant and Million is now the CEO of the group in Thailand. If we buy something to kill its culture and make it a part of, I guess, the whole, then we would be killing the very thing we paid to buy, if you like. So it doesn't make sense.
We have grown significantly since Series A, but to go deeper in each market was something that we still saw the amazing potential to do because it's so fragmented. So when it was time for us to raise a Series B, how would we deploy the capital was a big question because we're hyper Southeast Asia focused. We would have to do our own M&A. I do not have the experience of buying and integrating companies. I do not have the experience of being able to understand how to do a financial acquisition and work on the corporate development side of things. I don't have that capability. On the converse, being able to be a part of a group where now we are equipped to grow with them, that made a lot more sense because we saw the ability to achieve success together. We saw the success they have, their market leaders for a reason, buying things that might come to be bad decisions. That felt like an extremely risky move. Tying it all together, post-Series B, what's next? If we raised a Series B, we were worried that we might suffer from being too expensive from a valuation perspective, especially knowing Southeast Asia valuations are not as robust as the West. Being overpriced then becomes how do we exit onto a capital market? And looking at the region, looking at our sector, there were no major successes in this field. And I think all that pieced and pointed to the right direction of joining the group.
When you look at influence marketing and social as a discipline, yes, scale, numbers are important, but perhaps more important than anything is the authenticity of local cultural connection. And that is something that Hepmil has in spades. When we started 2025, we had always known influencer marketing was becoming a bigger share of our clients' budgets, but I don't think we were in market for somebody. The fact that on one of our largest clients, we were seeing both successful returns as well as successful growth and successful ways of working, that put together, that's why it kind of happened. It was, I think, a midnight text conversation between me and my two direct reports, who then reached out to Karl in another midnight text conversation, and we went from there.
We were never the hottest startup with the most coverage. We just told ourselves the only metric that truly matters is revenue, it's profits, and it's customers. Everything else is noise. So at the end of the day, I think we're happy to deliver success for the industry, but I think many startups just chased after the wrong vanity metrics.
Yeah.
Going after big coverage, PR, or speaking at the right conferences all the time. That's stuff that we had to actively tell ourselves we don't want to do, because that's not real success, that's not real revenue.
I've been CEO for the Southeast Asia region for almost 5 years now. I've only done 2 acquisitions in that time, right? They are our second. When we look at the business, I am obsessed about finding the company that only cares about its clients. As Karl said, chasing the vanity metrics of headlines, of valuations, of names, if you like, or the buzz that is there, that is meaningless. Today, consumers are buying something not just basis what the brand says to them, but rather what other people like them are saying to them about the brand. Why are these people more trustworthy today than maybe what brands say? It's because they speak in a vernacular that connects. They reference real world problems, not maybe just what brands are thinking about are the problems that consumers are going through. Often that consumer speak can be quite different than brand speak. Because they have a creator mindset, and that's their success from SGAG, that authenticity of being able to connect with a consumer, that cultural understanding, the understanding of, what is my 14-year-old say is cool, I will say, oh, isn't that cool? And she'll be like, Mama, nobody says cool anymore. Yeah, so why this deal now? I think because the time for effectiveness in influencer marketing has never been more at its peak. Certainly budgets are tight. All of our clients are reevaluating the effectiveness of their marketing mix and where they're spending money. But the great thing in that is that where it is effective, I think clients are doubling down and doubling down big time. So if we can prove effectiveness and if we can build predictable, provable outcomes for them in their investments, they'll actually do more in those spaces. I think when we look at a business, you can look at one line item on a P&L. It's usually a pretty poor evaluation of the business. I think any business that you look at the holistic P&L, you look at holistic trends across years, and you also think about what that company could become as they integrate into your company. So for me, based on the holistic evaluation, not just that I did or my team did, that we then presented to our group global CFO, the M&A team, etc. Based on all of that, I don't think that was a concern for me.
I can't comment on how much each of them are going to get. I don't actually know because, yeah, they have different things that they care about. But for me, I did not lose any money for them. I returned positive returns. Whether some are higher, some are lower, that's up to them. At the end of the day, it's good for the ecosystem. It's good as a way to ensure that the credibility of investing in startups in Southeast Asia is not a fluke. As we all know, the investment sector in startups is beat up. It's down. It's not in a place that we thought it would be 5 years ago. And I look across the board, every night I have cold sweats, right? Will I deliver a return? Will I deliver success to my investors who backed me when I had nothing? Who backed me when this could have been easily a failure in many pivotal moments through our 10-year journey? And to reach a point where I can say, hey, we're not the biggest success, but this is a success. If we are successful in the integration, what we will see is really a growth, a business growth, a shift in influencer spends where we get to do more. Obviously, in a climate like this, where AI and different challenges on the macroeconomy, we are cautious about changing headcount. So the only way is up, but hopefully not too much, not too fast, where we would be maybe too bloated. We have over 310 employees across 6 markets. Many of them perhaps would never even dream of having the opportunity to work in an MNC. The positive response at the town hall when we announced it was just overwhelming because many of them were so proud to tell their families, their loved ones, they're part of a global group now.
One of the great things that Hepmil has got is its strength in identifying people who really work in this space and work out in this space. Not everybody does. Let me be very candid. Not everybody is built for social and influencer marketing. Not everybody is built to work with creators. Not everybody is built to deliver success in this space. To grow people in this space and to identify them, identify future performers in this space is a very difficult thing. I think talent is the most nuanced part of our business. And we have it. I'd like to pull them into hiring for social and influence for the whole group, no matter where that function sits. Because clearly there's something there that they've been able to onboard employees who stayed loyal for so long and who are delivering so well for clients. I think Karl and I got together towards the late stage, and he said something to me which kind of has always stuck with me. He said, "This is the first time in my life that I will have a boss." Yeah? And the moment he said that, I was like, oh my God, he's actually choosing who his boss is. The responsibility of someone making a choice on their boss, their first boss in their life, that hit me like a ton of bricks. And I was like, okay, this just became super personal. So I actually felt maybe the reverse. I didn't feel any concern about these guys, but I was like, oh my God, we better get this right because they have made a choice.
My co-founder, Xiaoming, Adrian, we've done this for 10 years. We started as fresh grads. We built the business across 6 markets. We are not ex-consultants from big name companies. We never worked before in any company. And so to reach this point, again, 10 years in the making, we're intact, our teams are intact. We get to explore new ways of work across the world. In fact, just this morning, I came off a call with the US teams. Later, I have a call with the London teams. And for me, it is a whole new world. It's a whole new playground for us to learn the best ways of work globally so that we bring that best practice to our clients and our creators will continue to really enjoy the success of a global operation. And I think that to me was a dream come true. It's never been something I've ever considered. And when I think about it as I narrate it here, it just feels so right for us.